Yes, our first conversation today is around inflation, consumer price index. Nigeria's inflation rate slowed for the fourth consecutive month in the month of July. Yes, settling at 21.88% in July 2025. Well, this is from the National Bureau of Statistics. It's not my figure. In what is considered a slight relief for the nation facing persistent price pressures. Consequently, I beg your pardon, the 0.34 percentage points decline that we've seen in recent times. Now, let's take this forward to compare July 2025 to June 2025. A decline from 22.22% that boosted expectations that the Central Bank of Nigeria may soon rotate from its aggressive monetary tightening stance, which has kept borrowing costs at a record high. Now, the CBN has been at the forefront of fighting against inflation, back to back, employing series of measures, including sustained increase in the monetary policy rate and stricter liquidity management to absorb excess naira from the system. But they're not doing this alone. On the fiscal side, the federal government has also intervened with targeted agricultural support. Schemes that, like the release of grains, import duty waivers, critical food items to ease supply side pressures. According to analysts, these combined efforts are finally starting to work their way through the economy, leading to a gradual, albeit uneven decline in price levels. Now, before I introduce my first guest, let's see what the trend has been for the past few months. Now, for March, it was 24.23%. That was inflation figures that we had in the month of March 2025. In April, it dropped to 23.71%. This was after a rebased GDP, when we have our rebased CPI, Consumer Price Index. And now we have a rebased GDP too that puts us at 3.16%. That's for first quarter of 2025. April is 23.71%. And we move to May, 22.97%. That's it, in purple. And in June, 22.22%. That's where we found ourselves in the month of June. And this month is 21.88%. Well, my first guest today is the Director of Research and Strategy with Chapel Hill Denham. Is Mr. Tajuddin Ibrahim. He joins me to do this conversation around inflation this afternoon. Mr. Tajuddin Ibrahim, good afternoon, and thank you so much for being on the show.
Good afternoon. Thank you for having me on the show today.
All right. I'm sure you heard my analysis and, looking at the breakdown for like 4 to 5 months now on the chart, it shows that we've had this steady decline one way or the other. But what is your sense of Nigeria's inflation trend as we move in the month of August?
So in terms of the trends that we have seen on inflation, it is interesting that we continue to see disinflation in the month of July. And it is important to note that this is a remarkable development, remarkable in the sense that it signals the fact that prices are rising at a much slower pace when you look at the levels this year relative to the level at which they were rising last year. But what I believe is more compelling for consideration is to look at the trend on a month-on-month basis to further appreciate the consumer price index number published by the NBS. So we need to understand the monthly inflationary trend, despite the fact that we continue to see disinflation on a year-on-year basis. And I see this as a good development, but I believe that, we still have to focus on what the month-on-month readings are looking like. And for the month-on-month readings, it is interesting to note that three key, areas of the Nigerian economy are still driving month-on-month inflation higher. Number one of them is the food and alcoholic, beverages. Number two is restaurants and accommodation. Number three is the transport, sector. So we are seeing pressure in those three, subsectors of the Nigerian economy, despite the year-on-year disinflationary trend that we continue to see in the country.
A real good start there, I must say. And the food remains that very important aspect of inflation that I think that if it starts to reduce, everyone will feel the impact. And we've talked about insecurity. We've talked about the fiscal side support, releasing grains. We've talked about the livestock ministry and how that is trying to address some challenges in the entire agricultural landscape and all of that. But what do you make, or are there quick wins for Nigeria's agricultural space? Now, for us to address particularly the issue of pricing with food. I beg your pardon. Thank you.
I think the issue of pricing with food is a function of demand and supply. So what we really need to ensure materializes is a situation where demand is matched with adequate supply. When we talk about supply, that is where we, largely speaking, still have issues around the price dynamics that we currently are seeing in the market. Because if supply were to be that solid as demand is, most likely we would be talking about much lower prices as we speak compared to what we currently have. Let me put that in perspective, and I'm going to look at farm produce in this case. Farm produce, the sub-index for the farm produce in the month of June was down by 13%, which means that we actually had much more food supply from farming activities in the month of June, largely reflective of the impact of harvest, in my view. But at the same time, we recognize that it could actually be a lot better than that if security was put in place in food growing areas. And if we look at the month of July, farm produce inflation actually rose by 4.0% on a month-on-month basis after the 13% decline that we saw in June. So what that implies is that we had a situation where in the month of July, food that came from the farm in Nigeria became more expensive compared to their price levels in the month of June. And the major driver of that is lower supply. If we have lower supply, then we would not see prices coming down, because demand will always be there, given the level of our population, and also given the rate at which the population is rising. So in terms of the quick wins that we can expect the government to deliver, I think it will be difficult for us to be expecting any major quick wins if we do not fix two key elements. Number one of them is insecurity, which I believe we really have not fully addressed in the country. Number two is the event of flood. We have recorded several events of flood in the country in this year, and when you capture the areas that were affected, some of these areas are large, or they are big producers of food for us in the country. So you would expect that activities will slow down in those areas when we talk about farming activity. So fixing insecurity and fixing and addressing, flood are major things that, we really need to address. And I'm not sure that, addressing those two is something that, can happen very quickly. I reckon that it requires a more strategic, approach to ensuring that we are able to address, those two issues by making the necessary investment. I believe investment is needed in those two areas to ensure that we can, over the short to medium term, begin to talk about in a situation where those two problems have been fully solved. And I think, that is the way to go about it in my view.
I totally agree with you with the fact that the persistent monthly increase underlines the reality of that the cost of living remains on the high side for many Nigerians, and that's really worrisome. Now, looking at states' performance, now we saw Borno, Niger, and Benue recording the highest annual inflation rates. And on the flip side, Yobe, Zamfara, and Katsina recorded lowest. Can you also speak to this?
Those are some of the states where we have, high level of, insecurity, and also states that have been in the news in the past, few months for reasons around, attacks. And if you bring that to the discussion, what you comfortably will be able to conclude is that all of those unrest in those areas are indicative of their inflation level, because there is no area or state that will have unrest and people will be willing to come out to engage in economic activities. When there are no, when economic activities in such states are inadequate, it sends a signal around what their output will be, and it implies much lower output. At a much lower output level, you would see that demand will remain strong and supply will not be forthcoming, leading to higher prices in those states. So I'm not really surprised that we had a situation where the inflation of the first three states are much higher compared to the level in the last month. In terms of those states where we have lower inflation, my sense is that the drivers, largely speaking, are not far away from being having much more supply in those environments. It is when you have more supply that you'll be talking about inflation slowing down, because it's a function of supply and demand. That is what, largely speaking, determines what prices consumers will be paying. So those other three states, to my mind, are just expected to sustain the momentum. Whatever the governments in the governors in those states are doing, to my mind, that they should sustain the momentum to ensure that their inflation level remains relatively low compared to the previous months or the previous years. If that, for instance, is achieved, I believe that it will filter through the entire number that will be published on a national scale.
Mr. Taj, I know that we've had this conversation before now, that's focusing on the Apex Bank and the initiatives being put in place to address that disparity that we used to have between the foreign exchange market, the black market, and the other market and all of that. You know where I'm headed. And I think in recent times, we've seen a bit of reduction, if I am to use that word, with regards to that disparity. It's between 1,500, 1,550 in recent times, which many analysts, manufacturers, and everyone are saying, that's fair enough. We're able to plan. It's predictable. It's this, it's that. But two questions now. How sustainable is this move? Because we all know that there is still an intervention from the Apex Bank, one way or the other, to keep the rate at that very point. And again, I'm going to ask you, we are in the month of August. Do you still agree that our currency is appropriately priced at 1,550 naira?
Let me start, with the pricing of the currency. The pricing of the currency, as we speak, is indicative of an undervaluation because, we estimate that at currently around 1,500 level, it is indicating, an undervaluation because the fair value of the currency, to my mind, should not be more than like 1,000 or 1,200. Given the positive, economic indicators that we are seeing when we look at the external factors, such as the current account balance, such as the overall balance of payments. All of those elements in recent quarters have, trended in the positive, direction for the bulk of the past, few quarters. And when we bring that to the pricing, it is reflective of the fact that the current stability that we are seeing is reflecting the inflow, the rising inflows that we are seeing from the foreign portfolio investors into the Nigerian market. That is largely speaking underpinning the stability of our currency. What is also interesting to note is that we have a situation where our exports, our crude oil production is rising. And that, to my mind, is a positive development. And whatever the NNPC is doing to deliver such numbers, I believe they should do more of it to ensure that we are able to produce more crude oil and hence are able to generate more FX inflows. That is when we'll be talking about sustainable stability. Sustainable stability is what we need for our exchange rate over the short to medium term. And when we now talk about the impact of the policy of the CBN, I think comfortably I can say that those policies, broadly speaking, have been positive. I mean policies around the FX market, because as we speak, the latest inflation number shows that imported food inflation, for instance, on a month-on-month basis, declined to 1.5% in the month of July from 2.6% in the month of June. That is a reflection of a stable currency. That is the impact. And when you look at that sub-index from the beginning of the year till now, the direction or the trend has, broadly speaking, been downward. So which means, we should appreciate the CBN on that front in terms of, policy implementation. The only downside to what we are seeing currently is an environment of high interest rates, which I believe we just have to live with for the time being, considering that we need our foreign currency to exchange rates to be stable. A stable exchange rate is very important, and more compelling for us to have than for us to be more worried about, high interest rates, because we are in a situation where we have to choose between where we have to choose the lesser of two evils. And I think choosing high interest rates is the way to go, just so that we have stable FX rate, in my view.
Caught between the devil and the deep blue sea, something like that. That's where we find ourselves. Because you got me there, and that's the final question I had for you. I wanted you to speak to the fact that we're expecting this to shape conversation at that meeting. We have just 2 meetings to go this year, I guess. September and November, I think. Just 2 meetings to go with the MPC, if we are to follow their calendar. So if September is already just by the corner, just a few weeks away, we are getting into the month of September. So I don't think there would be any talks around the shift. Do you think that would even happen as we move towards the end of the year?
So 2 things to my mind, are what we should watch out for. Number one is, discussion around, beginning to bring down interest rates. I think I would not be surprised if we begin to hear the MPC members make some comment around the possibility of bringing down interest rates. The second thing, which I don't expect to happen, is for them to actually bring it down. So the meeting of September, to my mind, will be a meeting where they will hold all of the monetary policy parameters unchanged, bearing in mind two key elements. Number one, we still have pressure when we are talking about month-on-month inflation. Number two, external factors such as the movement of interest rates and monetary policy decisions in the U.S. are still, broadly speaking, on the high side, more like a tight monetary policy condition for them over there. So we have to be careful around thinking about bringing down our own interest rates, because if we bring down our own interest rates and interest rates remain elevated in over there in the U.S. and other advanced economies, there could be flight to safety. Where we will see capital reversal from Nigeria to other advanced economies such as the U.S. and other countries where interest rates are a lot more solid, and the risk of investment is very low. Don't forget that Nigeria is a frontier market, and as a frontier market, what we need to protect our currency is relatively higher interest rates compared to what is obtainable in advanced economies. So let us now assume that in the month of November, we have a situation where interest rate in the U.S. has been cut. I believe that will embolden the Nigerian Monetary Policy Committee members to also begin to think about cutting interest rates. Nevertheless, an inflation rate of 21.88% is below 22%. Paving the room for a lot more positive differential between the monetary policy rate at 27.5% and inflation rates at 21.88% at some point, possibly from November. Discussion around rate cuts, to my mind, will be a lot more solid among the MPC members. Even if a cut does not materialize in November, I think there will be votes around cutting interest rates from November onward.
Mr. Tajuddin Ibrahim, always interesting having these conversations with you. I must thank you so much, Director Research Strategy, Chapel Hill, Denham. Do enjoy the rest of your day.
Thank you for having me on the show.
All right, then we have another.